Bitcoin and ETH analysis coming up. We're going to find the hidden levels that are keeping price pinned in the range. Hey guys, it's Keith Allen. Bumpy, nasty weekend. Fun watching the Super Bowl. Watching spoofs in the order book. Yeah, I was multitasking during the game. I'm going to show you what I found over the weekend. And also going to show you some, some levels that might be hidden that you might not have seen. And we've got a window to that. So we've got that and a whole lot more coming your way in today's Bit Break analysis. If you feel like the crypto market is more volatile and more unpredictable than ever, don't worry. You're in good company because it is. On the other hand, if you are finding yourself in a situation where you feel like the market keeps moving against your trades and you keep getting stop hunted or liquidated and you're losing trades, that's a good indication that you might be over trading. And what I'm going to show you today is, what I'm going to show you today are, first we're going to do our normal analysis, but I'm going to show you some levels that you can watch and a tool to help you identify them that will help you maybe, how should I say? Well, let me put it to you this way. It has helped save me a lot of money. It's mitigated a lot of risk for me. So we'll get into that here shortly. If you're new to the stream, welcome. My name is Keith Allen. If you're an OG, thank you so much, man. I'm really grateful for you guys, each and every one of you, new and old. And glad to have you with me here as we kick off the week with some more volatility for a change here in the crypto market. Yes, we are deep in a bear market, and this one is maybe among the nastiest we've ever seen. That may be debatable for some, but I've been playing in the cryptoverse since 2017, and this one chalks up as pretty nasty. We see a lot of similarities between what we're seeing now and previous cycles. So no surprise there, but man, just the fake outs and the spoofs are just getting to epic levels. So we're going to climb into that as well. Do me a favor before we start, if you haven't done so yet, smash some buttons, help me grow this channel. I work hard for you guys and I do it for free. And I drop that free alpha on you all the time. And all I'm asking for in return is for you to help me grow the channel. You can do so by hitting the like, commenting and engaging with me here, and sharing. So if you would do so, do me a favor and share it right now before we get started. We're going to cover a lot of ground in here. We're going to look at Bitcoin charts and ETH charts. We're going to look at the candle charts. We're going to look at order book data and order flow data and fire charts, and share a few other surprises with you guys here today. And if we have time, maybe we can look at some other coins as well. As always, live chat is open, and nothing makes this more fun or more valuable to you guys than your engagement here. So I invite you to engage with the lives as well. If you're watching a pre-recorded version, you can comment, and I promise you, I go through those every day, and I will come back and respond to your comments if you comment on YouTube or on Twitter. Okay. So without further ado, let's go ahead and share a screen. And I will start here let's start on fire charts with Bitcoin. I'll show you what I found over the weekend, what I saw while I was watching the game yesterday, and how things have developed from there. Let's go with this guy right here. I got fire charts up, and we can see I posted on Friday that 69K was going to be that level that you really needed to keep a watch on. It is a matter of kind of the dividing line between bullish hopium and paradise. And that remains true for a lot of reasons. And I'll show you that in the candle chart here in a bit. But there's some nuance to that. And some of that nuance is the fact that price we did close above 69K yesterday for the weekly chart. Price then fell back down below. And as you can see, we have come back down to the 68s, and then now pumped back up to 70,000, 700-800 or so. And now look what's happening down here. This is really what you need to be in tune to. Whales are selling again, right? They're basically buying dips and selling rips. But look at this right here. Let me turn off this tag tool so we can not be covering things up. Right here, Last night I'm watching the game and I'm wondering if we're going to see price pump up, after the close, or what's going to happen. And boom, all of a sudden we have like 20 million shows up here in bid support close to price and right above 69K, right? There's a 69.5. And so I'm like, okay, somebody's trying to hold price up, but I really didn't think they had an intention to get filled. When you see big blocks of liquidity show up like this, they often are there to herd liquidity in the opposite direction and ultimately spoof. And so I post something in the Telegram community that, like, hey, here's some shenanigans. And lo and behold, I think it took about 90 minutes for this to spoof. But what happened in that time frame, right? Price moved up, and then they pulled it. And then I woke up this morning and saw another rug pull here at 67.5. I was like, oh, this is just nasty, right? And so price dipped back down and has recovered for the moment. All right. So whether this actually turns into a real breakout or a breakdown remains to be seen. And this gets me to some of those levels I wanted to share with you. All right. So I got some stuff on my screen here. Hang on a second. So let's see. And again, guys, don't forget, live chat is open. Love to have you engage with me here. So let's go over to the candle chart. You can see price hovering right now around 70,500. But look at this range here. Okay, so here's the 2021 top. And for anybody who doesn't understand why that level is so important, why 69K is so important, it's because it was not only was it the 2021 top, but it's also an area that price consolidated under for a very long time. I mean, we spent like 8 months. What was it? March of 24 is where we double topped. And then it was until election day, March, April, May, June, July, August, September, October, November, 8 months. And then the the cherry on top, when did we get that breakout? Election day. Election day, we broke it. And then boom, here's the Trump pump. And so we, of course, at this point have retraced that Trump pump and then some. And now price is recovering. So what held things up? What held things up? And what's keeping things in place and what's holding things down? Okay, so I'm not going to lie. 69K was a target of mine, and I talked about it for a long time. So like just about everybody else, was pretty surprised to see price go ripping right through it. But look where it stopped. It stopped where we had a concentration of these Timescape levels. And if you're not familiar with Timescape levels, let me break it down for you. Timescape levels are, we're marking them as quarterly opens and also the first week of the quarter. So as you can see here, right, we have just what I have near range here, right? 2025, April 1st. So this is the quarterly open. And then this is the first week of the quarter. And why does that matter? Well, it matters because we have some history. We have history that shows us that typically when price opens on the quarterly, if price goes down from there, it often it can bounce. And if price goes up from there, it often reverts. And in this case, we had the quarterly open, price went up, and then it reverted. And this served as resistance. Excuse me, I'm way early here. This was, let me go back to when that Timescape actually happened. Okay, so here we go. Here's the illustration. Okay, so the top one is April 1st. Okay, so price went up, and then it reverted. Okay, and then it found support and it bounced back up. And so we see this kind of pattern that has happened historically over the quarterly open and that first week of that time frame. And these are serving, if you don't have this, if you're not looking at this, most people aren't drawing these lines on every quarter, right? And so you just kind of are left wondering, like, okay, there's no other technical support level here. Why did it stop in this range? And even if we went to the weekly chart, we were looking on the weekly time frame, we were looking for 58K. We didn't quite make it. So why did it stop in that range? And the reason it stopped, if we're looking for a technical reason, we can lean on timescapes that show us, we had some support here. Let's go back to the daily so we get both candles. Okay, so we had a concentration of timescape support here on the daily time frame of these quarterly opens, and that technically served as local support. We had this wick down to 60K that was just nasty. And quite frankly, manipulated. And I shared some stuff last week with you guys that showed you what those charts were, identifying some of those manipulative phases. Let's see if I can find it really quick up here without taking too much time. Okay, so here we go. We saw it happening in the order book. We could see price suppression. We could see more suppression, et cetera, and price came down. And this was just before we really saw things break down. And then, of course, we found support here, as we could see bid liquidity stacking, and this was close to well, it was over 50. I want to say it was about 55, almost 60 million stacked here at 60K that helped keep price up. So collectively, we use the order book data and timescape data to kind of triangulate where price might hold. And so now look at what's happening. Now we're finding resistance at this timescape level. And we're now on, let's see, 1, 2, 3, 4 days of testing this level here. And so in terms of wondering, okay, if I, should I long here or not? Well, we've been having a bit of a discussion in the Telegram community, and I will tell you that from a purely structural and technical perspective, that especially for a longer term DCA strategy, 69K is a sound level, right? You're hearing stories that some of the treasury companies are buying in at that level. It is a structurally strong, sound level to include in a dollar cost averaging strategy. Now, does that mean that this level is going to hold through the day, the week, the year, the bear market? And no, it doesn't. Okay. And as you can see, we're seeing some resistance right here. Now, that said, I still expect to see a resistance test up here in this range somewhere. I would technically like to see the yearly open timescape level tested here, because this is the most critical timescape on the map right now. That's the yearly open, and that's at 87.5. And you can see we had resistance up here around that 50-day moving average, and now it's inching below that timescape level. This is really, really strong technical resistance. The 21-day moving average is at around 80.5. This is also pretty solid, and as time goes on, this is probably going to pull right down into this level, into this timescape level, which would make 78.5K strong. So this whole range right here is very strong resistance, in my opinion, but we can't get there until we clear some of these other key levels. Okay, so we have some technical levels on the chart. Of course, the 2021 top is marked, and that is trying to establish itself as local support, but we've seen a wick through it every single day so far, which is not considered a sign of strength. Even this one that looks close, it dipped down to 68,850, so it didn't hold there either. And so eventually, we should get some sort of resistance test up here. Whether that takes a day, days, a week, weeks, or months remains to be seen. But this level, as I said on Friday, is really the dividing line between bullish hopium to at least go test these, and a deeper correction down deep into paradise, right? And so these timescape levels are kind of the hidden levels in between those technical levels that everybody's marking on their chart. The algos aren't looking at the timescape levels like they're looking at the key moving averages or key support levels like the 2021 top. So this is kind of a secret weapon here. We've been using this. We actually released this over at Material Indicators. We released this late last year, and it has proven to be really, really valuable. Now, if you were just going to play, really try and mitigate some risk and mitigate a lot of stress and anxiety, you could technically not long until we reclaim this timescape level. Okay. So that doesn't mean you don't trade. We got a lot of guys who are short, who shorted this and are taking profits at these key levels, took profit here at 69K, or at least a partial profit on that short at this level. Yeah, there's until we start seeing signs that we really do have a recovery here, it's still bear market, right? So let's take this over to ETH and see if we can gain similar insight on the ETH chart. And we most certainly can, right? So let's take off trend. Here you can see price is trying to flip a timescape level here right now. And if price can hold above this, there's not a lot until you get to the next level at 22 point, we'll call it 2,280. And likewise, if we break down this one looks strong to me, right? This was part of that crazy dump we had on Friday. But this really looks like a strong timescape level. This, what is this? Q3, 2023. We have a concentration of multiple different timescape levels clustered in this range, and that makes it a stronger support level, in my opinion. So just like Bitcoin, you've got to flip the level to get to the next level. And there's not, in terms of technical friction, certainly nothing here on the daily chart between here and the 21-day moving average. Let's see what the weekly chart looks like. Weekly chart, we have the 200-week moving average here at 2450. So this is going to be very strong. And look, it's like perfect confluence here with this 2024 timescape level here. So this is going to be very, very strong resistance, in my opinion, at that 2,440 level. So, and in terms of, a potential breakdown on ETH, I have a trend line here that would really be interesting to me. I'm a buyer at 1595 for sure. And of course, we have some confluence with this 2025 Q2 timescape level here as well, which would make this a strong technical support. Now, doesn't mean it can't shoot through. And if it does, look, no friction till you get down here to this 1275 level, right? So keep that in mind. Likewise, if we broke above this 200-week moving average, you would not have a lot of friction. You would have one more timescape level before really you have open space to get back up here and try and reclaim the yearly open. All right. So those are the things I'm looking at in terms of identifying levels that we can conceivably find some relief here. Now, just looking at this ETH chart here, and this is live in the fire, guys. Look at this. Look at the 21-day moving average. It looks like it is on a trajectory to potentially death cross both the blue 100 and the red 50-week moving averages, which are already death crossed slightly, by the way. And if we were to draw this out and just now this is not scientific, okay? These trajectories change, and I can show you an example where they changed on me last week quite drastically, actually. The death cross accelerated about a week faster than we thought. But let's just assume if we stay somewhere remotely on this trajectory, we could see this cross. Let's give that a red one. We can see it easier. We could conceivably see this death cross happening here before the end of the month. Again, this is not scientific. This is just kind of roughing things out. And if and when that happens, right, this to me looks imminent. It would take an incredible God candle to pull out of this trajectory. And I don't even know if that could do it in the amount of time that we have. And so if and when this happens, even though this is a lagging indicator, I would expect to see price decline further as it has every single time this has happened. Look, death cross, boom. Let's go back in time and see if we can find some other ones. 21, falling through everything, ugly. Here you go. These are major corrections, right? So just keep in mind that is likely a likely scenario here. And on Bitcoin, let's look and see if we have anything similar on Bitcoin. Bitcoin on the, and I was just telling you how these can accelerate. I want to show you this before I delete it. Let me clean it up and make it a little bit easier to see. So I had drawn these Timescape levels here on the Bitcoin chart, and this was on the weekly, right? No, excuse me. Those were daily. Those were dailies. And they accelerated, right? I wasn't expecting for this to happen until, like, I don't know, maybe like around this weekend. And instead it happened a week early right here. Okay. So the one that I just drew on the weekly time frame on ETH doesn't have to stay on that trajectory at all, right? This is just kind of roughing it out to see what's happening here. And at the moment, you can see all of the daily moving averages are completely crossed, right? Death crossed all four of them. The green is the 21, the red is the 50, blue is 100, purple is 200. If we go to the weekly time frame, we can see we also have a recent death cross between the 21 and the 50, and that's pretty nasty. We have technical support here at the 200 down here around the 58K level. And we appear to have another imminent death cross forming. Let's see, let's go like so. Oh, I got to fix that. Kind of up here a little bit and like so. Let's make it green so it matches. And now let's draw another one here on the 100 moving average. And see what makes sense. We'll make this one blue so it matches. And that would put us somewhere around the 9th of March, right? Beginning of March, if we stay on this trajectory. And so imagine if we had a recovery at the moment, right? Imagine if we had a recovery that took us all the way up here. And by the way, this 87.5, where we see this weekly moving average, the 100-week moving average, look where that happens to have confluence. We get up here. This is the first weekly open. And if I switch back to the daily time frame, we can see that we have the yearly open right up here. Okay. And this is, you see this dashed line, that's the trajectory that I just drew for you guys. So it has perfect confluence with the yearly open, which is going to make this really, really strong technical resistance up here at the yearly open Timescape level. That's 87.5 if you're making notes down. making notes at home. So keep all these things in mind. We have to do this level by level, one rung of the ladder at a time, if you will. And each of these timescape levels is going to serve, each of the ones over above is going to serve as resistance until they're flipped, and each one below is going to serve as support until they're flipped. And so, and they may not all get flipped, okay? So just know, like in this situation right here, if you're contemplating whether you want to long 69K, again, DCA strategy, it's a solid level. If you're looking to scalp or swing trade, then the trade is as limited as this in terms of a, how should I say, a quick scalp, right? There's not a lot there. 3.5%. If you got that in a day, you'd be thrilled and would do that all day, every day, right? So that requires timing it perfectly. And just know that one of these times it's either going to break out or it's going to break down. So don't be greedy. Take the money and run, as they say. Real quickly, I want to show you a couple others before I run out of time. You can see that Litecoin has, boy, it came in a really interesting spot. And these areas, let me turn timescapes off for a second, just so you can see. And I encourage you to, do your normal technical analysis, and then you can deal with something like timescapes and overlay that on your chart. But you can see that Litecoin shot through all of its structural support and came into a range that was interesting to me. And I longed it, and since it started giving it back, I took the money. I closed it. I took the profit. So what you want to do in that situation is slide your trailing stop loss up into profit, so you're not giving it back, right? And so if we switch on timescapes, we can see like what could potentially be there that we're not seeing with our normal technical analysis. And we can see there's a big cluster of support kind of in this range that we're in right now. And some of it is support and some of it is resistance, right? We're right in the middle of this mess. But if we are to break down below the $50 level, you've got some air, some black space down to 46. So keep that in mind. Similarly, I want to look at Solana. Talk about a potential free fall. So what's holding us up on the technical side? Gosh, that's a good question. There is actually some technical support here, just based on kind of prior highs. Let's see if we have some confluence in this guy. A little bit, nothing that I get really excited about, right? There's structurally there is, right? So that it makes sense to be holding at this level because of the support here, the resistance here, et cetera, et cetera. So this does make sense. But look what happens if price falls through this. That's a long way down. And I have an area of interest here highlighted on my chart, and close to it is the timescape support level, right? So keep that in mind, right? This could send price conceivably down to the $32 level. And if you lose that, you go down to the $23 level. So if you're going to play in this arena, just know that you want to have your stop losses set so that you don't have to take this ride all the way down, because it would be a nasty one. Okay, look at this. If you lose this, then you are looking at another potentially 38 to 50% drop. And if you lose that, it can very quickly turn into a 70% drop. So be mindful of these levels. They're marked by the quarterly opens and the first week of each quarter. And so by virtue of marking quarterlies, we see the annual timescape levels as well. And in terms of this bear market or a recovery of the bull market, it's going to take a RS flip of that yearly open and that first week of the yearly open before we can even have the conversation, right? Obviously, other things have to happen. Price has to flip the other moving averages. They need a golden cross and unwind, et cetera, et cetera. But you don't even get to have the conversation until we flip these levels here. Hope that gives you some insight into how you can kind of identify some hidden support and resistance levels in between the technical support and resistance that most of us and the algos are already identifying on our charts. Timescape levels really can help you mitigate a lot of risk just by watching and monitoring how price is reacting to those levels before you open a position, or to use them as stop loss triggers, etc. So again, hope that gives you some insight. If you'd like to engage with me more, you should join us in the Telegram community. I invite you to do that. You'll find a link to it at the on the Material Indicators page on Twitter, also on the Material Indicators homepage. We've got it over on the YouTube channel, etc. It's easy to find. Hamza is saying it shouldn't retrace the 80K level before another drop. Maybe unload there. So if I understand your question, are you asking if it should retrace the 80K level before another drop? I mean, listen, things that should have happened, there's a lot of shoulds. Okay, we should have retested a lot of these levels already, and we didn't. We should have had a retest of the 50-week moving average. It didn't happen. We should have had a retest of the 100-week moving average. It didn't happen. We should have had a retest of the yearly open Timescape level. It hasn't happened yet. So yes, those things should happen. But if they do, I will be looking for, so here's the tricky part, right? The tricky part is, if we do rally all the way back there, if we do rally all the way back to these, yearly Timescape levels, right? We're talking 87.5 for the yearly open. The first weekly open is up around 91.5. Obviously, if we cleared this, things get really interesting, right? Then there's only one more Timescape level to go. We would have the 50-week up in there. It's at 100K. So yeah, that would be really exciting. And you have to wonder, okay, is this really going to be, is this a bull market recovery, or is this just a bear market rally? And so these Timescape levels are going to help us figure out if price can clear that. So I would say that I'm a guy who likes to dollar cost average my way in and out. So I use split TPs, split take profits. So I personally, I do have some longs, and I will take profit at those key levels heading up. If price continues beyond that, well, that's okay. Because I'm mitigating risk along the way. I'm taking profits. Nobody ever got wrecked or broke taking profits. And so if I have to buy back more after a breakout, here's what would happen. Okay. On that breakout, once price actually clears these two Timescape levels, there should be a support test. So that would be where you would want to long at that point, right? You could then long the breakout either from this one or this one. And likewise, if you get a rejection here, that's a great spot to short, right? So these Timescape levels can really come in handy for you. Again, if you want to learn more, you can find out more on the Material Indicators website. I got links to it in the description down below. And of course, come join us on in the Telegram community. It's free. We are talking about this stuff all day, every day, 24/7 crypto. All right, guys, going to leave it right there. Hope that gives you some insight to help you navigate the week and this nasty bear market. Trust me when I tell you, bears are not your friend. And in this instance, neither are whales, okay? They are buying dips and they are selling rips. You can see it right here. Don't get caught. Have a great day.